In 2011, in Washington state, the Foreclosure Fairness Act was put into action. Its goal? To mediate on behalf of homeowners who can't afford their mortgages. In 12% of those failed negotiations, it was found that the big banks, including Bank of America and Wells Fargo, were acting in bad faith, doing nothing to help the homeowner in need while lining their pockets. Greg here has witnessed firsthand how lenders often act against the best interests of their customers. And he's doing more than just speaking out against it.
My name is Greg Giniel. The business name is Giniel Financial Group, and I'm the CEO and president.
Greg and his team are flipping the standard loan culture on its head. By putting customers' needs first, these mortgage brokers are embracing their Midwest values to go toe-to-toe with the big banks. What is Giniel Financial Group and the history behind creating it?
I was doing witness-only closing, so I would be the person that would go to the home and notarize the closing package for other lenders. It was 2005 or 2006, and I drove out to, I think, Bath, Michigan, which is in the middle of nowhere. I was sitting across from the loan officer, and the borrower was to my right. He goes, "I know if I sign this mortgage now, we're going to lose our house in 2 years. And if we don't sign it, we're going to lose our house in 6 months." And the loan officer was sitting across from the table, just sitting back going, "Well, what are you going to do?" And he made probably about $20,000 off these people. And I was sick to my stomach. As an independent third party, I could not say, "Hey, you guys are getting worked over here." I knew I could treat people better, and I knew I could treat them the way I would want to be treated. We do all of our business through what our core values are. Our core values are clients first, making things simply easy, getting better every day, family and fun. We are mortgage brokers. We are the truest form of mortgage brokering, where we find loan applicants that want to buy a house that necessarily don't have enough money to buy a house, whether it be a self-employed person or an employee, and we help them obtain a mortgage to buy that house. And we use a multitude of different lenders that specialize in different things. And we team them up with the best lender and really try to advise them on what is the best mortgage for their situation to reach their goals.
Well, we've got you here. We've got to ask, are there any specific mortgage roadblocks you see business owners run into?
Typically, if you're a business owner and you're working hand in hand with a good CPA, a CPA's job is to expense out all that money that you can in order to save you on taxes. As you're getting a loan, it's our job to find usable money. So now we are at odds here, where we're trying to find money we can use. The CPA is writing off money. And typically the CPA comes before the loan officer. So working with a mortgage professional in order to do that is key. And going to the banks is probably not the best bet. Loan officers at banks, they're paid a salary. They're going to make their money regardless if you close or not. Working with a mortgage broker, we make our money when you close. So we're going to do everything we can within our power and reason in order to help you reach that goal. That's just one aspect of the process that can be a barrier. There's multiple mortgage products out there that could help an entrepreneur in a multitude of ways. But typically the big one is having everything expensed through your tax returns and making sure that your tax returns are actually filed, making sure that taxes are actually paid, making sure your books are up to date. This is huge, especially a lot of startup companies. We just jump in and let's make revenue, right? Because that's the whole point. You jump in, you start to make revenue, and we'll worry about that in a little bit. We'll worry about this in a little bit. And having a good CPA, perhaps a good CFO, and making sure all that is taken care of and having all your books together is 90% of the battle.
Greg and his team at Giniel are rising to the challenge, like many other independent non-bank lenders. In 2009, non-banks accounted for just 9% of the market share for mortgages. Their share has been rising exponentially. In 2020, non-banks accounted for nearly 70% of all U.S. mortgages. When mortgage rates dipped in 2020 to below 3%, buyers were eager for a rare, affordable deal. Larger banks were wary to participate in the boom, their last financial crisis still fresh on their minds. But this time, in their absence, independent lenders stepped in to find mortgages for those willing to seize the opportunity. And while non-bank lenders tend to take on riskier, higher-margin loans, they're effectively extending lending options to many markets that big banks prefer to simply not serve. Okay, Greg, do you have any advice for other entrepreneurs that you wish you'd known early on?
Having a system in how to run my business that has brought clarity to the people in the company. Everyone knows what direction we're heading in, and people are your greatest resource. Even though I know we're talking to a technology company, but there's people developing that technology. And having everyone on the same page, going in the same direction, and knowing what our goals and passions are, and having that set of core values that we literally filter all of our business decisions through, I think is the number one thing. Your partner may be another business. And if you are looking out for their best interest and yours, and those are aligned, there's nothing that will stop you. Because everyone will give you maximum effort to help grow that as long as they share those core values. And so making sure everyone knows what those core values are. If they're not the right people, they'll self-select out, and the right people will stay, and they will help you with that passion for what you're trying to accomplish.